Yeah, I was just reading that. Like there was a quarter of point of reduction in the interest rates, and
Yeah, so that
I
with you mean what Powell released?
yes,
Yeah.
yes, and I think that I believe like that's gonna have an impact on the 10-year Treasury rates, which like this is what leads the rates for the properties for the housing.
Hmm.
Uh, yeah, like I think we might have to wait, in my opinion, like a couple of months for this to have an impact in the public, you know.
Hmm.
Uh, but I think we're heading the right direction, like we're like there's more inventory available, like more people are willing. I don't know if willing is the right word, but like definitely motivated to sell.
Because
And
yeah, their homes are sitting a little longer, right? So they have to, if they tried listing it as to what it is currently worth, or even more than what it's worth, and not preparing for a declining market, it's definitely going to sit. And that's a good point that the Powell did the Fed chairman did drop the Fed rate 25 basis points, and immediately after that, like I always try to tell folks, is that the Fed rate doesn't directly correlate with mortgage rates. As you said, the 30-year it's based off the 10-year Treasury bond, right? And so we
yeah,
actually saw from Wednesday to Thursday, you saw rates go up about a quarter of a point, and then they leveled off a little bit. Mortgage rates I'm referring to there is so a quarter of a point up, and then it came back down about an eighth of a point. So even though the Fed rate improved, mortgage rates went up, right? So I agree with you, like what you're saying. It may take a couple months for everybody to respond to what the Feds are doing. I think it was more of the rhetoric of what Powell said. Like he said, hey, this is not because of the job market. It's not because that there's uncertainty in the economy. He said it's cautionary, right? It's a
yeah,
cautionary move to reduce the Fed rate. So that's why I don't think we saw the movement that we were hoping for in the bond market. If he
yeah,
would have came out probably and said, hey, the job report came out, it was horrible the last 3 months. It's been revised. That's not great. It's a lot harder for people to get jobs right now. I mean, he kind of brought it up a little bit, but I think he kind of sidestepped it quite a bit, trying to say, hey, everything's still okay. Everything looks good. So based on that, like, that's where I think the bond market's not going to move as fast as we want it to. I was hoping we would see some big movement going into Q4. But I think it's going to be interesting, like you said, to see what happens over the next month or two.
yeah. I mean, to me, like people are asking, like just this week, I had I went to work at this school, and people were asking me, like a couple of workers, hey man, like what's up with the job market? Because I'm assuming they
Hmm.
heard this news. And
Yep.
the thing is, like when the general public hears rates went down, they instantly think, oh, houses prices are going down as well. But
Hmm.
it does have a correlation, but in the opposite way, right? Like if the rates come down, more people that have been waiting, they're gonna jump into the ship and they're gonna be like, hey, we all want to buy. So the prices are gonna
Yeah.
go up. But a lot of people believe, oh, rates went down, houses prices went down, and then
Oh, the correlation of the two. Gotcha. Yeah. That's an
yeah, it's an
interesting
opposite
take for
correlation.
people.
Yeah. So yeah, and then and some people do believe though that we set the prices of the houses, and this is something to consider. Like some clients, they most of the clients when they own property, like and I'm speaking for sellers, when they own property, they have what is it, like a personal attachment to that property.
Exactly. If they've lived there as a primary, of course, right? Because they've lived there for X amount of years. Maybe they raise kids
Yeah,
there, Thanksgivings, holidays. That's where it can be
but
difficult, right? If you've lived there for an extended period of time, you have an attachment to it. You always are going to think it's worth more probably than what it is. Even if it isn't, you're going to try to tie something to like, oh, I repaired the roof, or I did this with the AC, or maybe I remodeled some of the kitchen. So you automatically give it more value. I think psychologically that's totally normal or natural, if you will, right? It's
yeah,
something that means something to you. So of course you automatically put a higher price tag on it.